Hello everybody, I hope you guys are having a fantastic evening. I'm sorry for the late video, but I really do want to get you a video about Palantir. I did cover the Palantir earnings live earlier today with my man Arnie, my man Emmanuel, and my man Chris Patel. If you missed it, I'm going to leave a link up above. Please feel free to click on it and watch the entire live or bits and pieces as you see fit. I will be going into the Palantir earnings a lot deeper than I am tonight. I just wanted to give you a synapse, especially for the people that didn't get a chance to watch the Palantir earnings and just want an abbreviation. I'm also giving you my thoughts about what happened, my thoughts about what's going to be happening in the future, and just in general, my raw, uncut thinking and theory about Palantir in general. Before I do begin, I wanted to say I thought this was one of the best earnings that they had over the last year. It's very important to put everything into the right perspective and very important to understand the dynamics of the current market. And I'm talking about the entire economic market. Everything is going to absolute shit. And Palantir happens to be growing in a time where a lot of companies are not growing. Maybe they're not hitting their mark goals, but as Dr. Alex Karp says, give us time. Over a course of a 10-year period, we will be growing the amount that we're saying. They're predicting 30% annual CAGR, compound annual growth, and they definitely are coming up short, but there was definitely some positive news in this earnings about next quarter earnings. The total revenue came in at $478 million, which was an increase of about 1% from the last quarter, which is definitely super concerning. However, we do have some decent guidance for the next quarter, which I'll go over in just a moment. We actually beat what we thought we would. The estimate was $474 million. We ended up getting $478 million. Of the $478 million, $297 was from the U.S. revenue, and our U.S. commercial clients grew 53% year over year. This is pretty impressive. While the total commercial grew 17% year over year. Net dollar retention came in at 119%, which means that for every $100 or for every client that we have right now, we're able to squeeze out an additional 19% per client. Now, I know that we're used to some bigger numbers. However, that in general is a good number, especially with what's happening right now in the economy. Total customers grew 66% year over year, and average revenue for the top 20 clients is now sitting at $48 million, which is an increase of 15%. Remember, we are highly dependent on our biggest clients because they give us the most amount of money. So those biggest clients need to keep giving us more money for those contracts. And any increase of those clients spending money is, of course, good. The total commercial clients right now is 228. And this is very interesting. We have $4.1 billion in total remaining deal value, and we have $1.3 billion in total performance obligations. Our gross margins, although didn't come in as high as the last couple of quarters, we are still over that 80%, at specifically 80%. This is where it gets very interesting and very important. Palantir has $2.4 billion, $2.4 billion of cash on hand, which is very important. They have a revolving credit line of $950 million, which at this point they touched literally $0 of it, but they do have a huge staggering amount of debt in the total of $0. So they have $2.4 billion. They have a revolving credit line of $950 million. And they have $0 of debt. Besides for that, they have $1.3 billion of contracts for performance obligations. And then they have a total of $4.1 billion in total that are up for grabs. Full year guidance remains at $1.9 billion. And next quarter revenue is coming in at estimates of $504 million, which allows a growth of quarter over quarter of nearly 5.5%. 5.5% for a total of 4 quarters would be around 22% compound annual growth rate for the year. Now, 22% is definitely not 30%. However, 5.5% quarter over quarter growth is definitely a lot better than 1% quarter over quarter growth. And that 1% was a gift because we actually beat expectations. Now for the day, Palantir is actually down nearly 12%. I did buy an extra 300 shares. I took advantage of this absolutely gifted dip. And I do think that Palantir is moving in the right direction. Obviously, the numbers are not fantastic. However, on face value, this was a decent earning. If you dig in deeper, there's a lot of hidden facts and a lot of hidden data in the background that really helps the case of Palantir that it's growing. It's growing in a bear market. It's growing in a very certain situation. If you're going to read the Alex Karp letter, which I'm going to show you in just a moment, he gives a lot of insight into what's happening currently with Palantir. This is the US annual revenue. It grew from 2019 of 253 million, 490 in 2020, 2021, 808 million, and now we have 1.113 billion in quarter 3 of 2022. Now, this is for the US annual revenue. If you go just a little bit lower, this is a very key phrase, and I think people are supposed to understand or don't understand what's happening right now. We have a major war right now in Europe. Now, I'm not saying I'm right. I'm not saying I'm wrong. This is purely entertainment and educational purposes. However, in my personal opinion, I think that we're going to come out super on top of what's happening currently in the war and the geopolitical uncertainty in not only Europe, but also in Asia and other places in the world. This is from the letter. He says, our software is at war in Europe and around the world. The software is the means by which nations both impose and defend their values. Our third quarter, from a contracting perspective, points to a growing strength of our defense business in the United States. And this is the total contract value by quarters. And as you can see, quarter 3, 2022, 1.25 billion. This is up from nearly 800 million in quarter 2 of 2022. So if you go a little bit lower, he says, we executed contracts in the third quarter of this year worth a total of $1.3 billion over time, with 987 million of the 1.3 billion coming from contracts entered into with the United States government alone. The significant increase in contract value this quarter was principally driven by the expansion of our work with the United States military to support the deployment of artificial intelligence and machine learning capabilities to soldiers on the front line. Furthermore, we do not view the increase in contract value this quarter as an aberration, but rather as a sign of more fundamental shift in our business from insurgent outsider to incumbent, particularly in the US market. This is a very, very, very important statement. We furthermore do not view the increase in contract value this quarter as an aberration, but rather as a sign of more fundamental shift in our business from